Welcome back to Investing Talk Podcast.
Today, we are conducting a deep dive into Strategy, the company, formerly known as MicroStrategy. And I really want to frame this right at the top for everyone listening.
Okay.
If you're still looking at this ticker and thinking about, business intelligence software, dashboards, you were looking at the wrong map.
Completely the wrong map.
This isn't a software play anymore. This is a highly leveraged, institutional-grade bet on the future of Bitcoin.
It's almost a misnomer to call it a company in the traditional sense, isn't it? It feels more like a holding company or a fund.
In many ways, yeah.
Yeah.
And we need to talk about the scale here because it is, frankly, hard to wrap your head around just how massive this has become. As of early February 2026, Strategy holds over 687,000 Bitcoin.
That is just a staggering number. I did the math on that before we started. We are talking about more than 3% of the entire future supply of Bitcoin.
Entire supply.
Sitting on one single corporate balance sheet. That isn't just a corporate treasury anymore. That's almost nation-state level accumulation.
It is. But here's the tension, and this is why we're digging in today. The stock is down, about 67% from its highs in late 2025.
A huge drop.
You have this massive asset base, but the market has absolutely hammered the share price. And yet, instead of pulling back, they're aggressively buying more.
As usual, before we start, subscribe, like, and comment to this video to support the show. It really, really helps us out.
So yeah, you've got a stock down 2/3 in value, but a management team that's acting like they've just struck gold.
Which brings us to the big question, right? Is this a death spiral where they're stubbornly doubling down on a losing hand, or is this the buying opportunity of the decade? Because looking at the chart, it really feels like you're trying to catch a falling knife.
And to answer that, you have to understand the fundamental transformation of the business. We just have to stop looking at price-to-earnings ratios based on software sales. They've effectively become a Bitcoin treasury company.
Let's look at the numbers on that, though, because the software side is still there. It's not a ghost town. They still have clients, right?
Oh, yeah, it's still there, but you should think of it as the engine room. In Q3 2025, their software revenue was about $116 million.
Which is fine.
It's fine. It's modest growth. It's a stable business. But that revenue isn't the point anymore. That cash flow exists primarily to service the debt and keep the lights on while they execute what they call the flywheel.
I've seen this mentioned, the flywheel or the 42-42 plan. It sounds a bit like marketing speak. What does it actually mean for the mechanics of the company?
It's actually a very specific capital market strategy. They raise capital both by selling new shares, which is equity, and by borrowing money, debt for one purpose.
To buy Bitcoin.
To buy more Bitcoin. Yeah. They're essentially printing their own shares to acquire a hard asset. The 42-42 refers to their target of raising $42 billion in equity and $42 billion in debt.
Right, so they're diluting shareholders to buy coins. And that brings me to the hidden asset. Because if you just glance at the headlines, the financials they look terrifying.
Terrifying is the right word if you're a traditional accountant looking at GAAP metrics.
Yeah, I'm looking at the Q4 2025 report right now, and they reported a $17.44 billion unrealized loss. That's billion with a B. And then in other contexts, they show a TTM net income of over $7 billion. So as the skeptic, I look at a $17 billion loss and I ask, how does a company even survive that? Is this company insolvent?
And that is where you have to put on your sort of crypto-native glasses and look past the generally accepted accounting principles. Those are non-cash losses. It's a paper loss.
Can you break that down? Paper loss usually sounds like an excuse management makes when they actually lose a ton of money.
Okay, think of it like this. You own a house worth $1 million. The market dips for a month. And Zillow says your house is now worth $800,000. Did you actually lose $200,000 in cash? No. You didn't write a check. You still own the same house. Strategy still owns the same Bitcoin.
So it's an accounting fiction, not a real cash loss.
Exactly. You have to look at the balance sheet, not the income statement. The income statement is just noisy because of volatility. The balance sheet tells you what they actually own.
Okay, so let's ignore the Zillow estimate for a second. Yeah. What is actually in the vault?
As of mid-January 2026, they hold 687,410 BTC. At current valuations, that's worth around $65.5 billion. That is the hard asset floor.
But you can't pay the electric bill with Bitcoin unless you sell it, and they famously promise they will not sell. So if the price drops and that $17 billion loss scares off lenders, Aren't they just stuck?
And that's the common bear argument. It's a valid fear.
If I have $1 billion of gold buried in my yard but zero cash, I can still go bankrupt if I can't pay the mortgage.
Right, but they've built a massive safety net to prevent exactly that scenario. They have a reserve of between $1.44 and $2.25 billion in U.S. dollars.
So they have a cash buffer.
A huge one. That cash is specifically set aside to cover 12 to 24 months of all their interest payments and dividends.
So they've structured it so that even if Bitcoin goes into a brutal crypto winter where the price drops and stays down for, say, 2 years,
they never have to sell a single coin to service their debt. They can just burn that cash pile while they wait for the market to turn. They've essentially bought themselves time.
A 2-year runway, that's significant.
Precisely, and that's why the valuation is so interesting right now. The PE compression is real. It's sitting around 5.48. You're essentially getting the software business for free and buying the Bitcoin exposure at a discount.
Let's pivot to the charts, because even if the fundamentals make sense in the long run, this volatility is not for the faint of heart. If you're holding this stock, you need a stomach of steel.
It is definitely a roller coaster. If you want a slow, steady compounder, go buy a utility index. This is something else entirely. High octane.
The 52-week range is just wild. We've seen a low of $139 and a high of $457.
A massive spread.
And right now, we're trading in that 141 to 157 range. It feels like we're right back on a psychological support zone. Basically, we're on the floor.
And that volatility is by design. You have to understand the beta. The stock has a beta of 3.43.
For those listening who don't trade technically, can you explain beta like I'm 5? Why does that number matter so much?
Sure. Beta measures how much a stock moves compared to its underlying asset. A beta of 1 means it moves in sync. A beta of 3.43 means the stock moves roughly 3.5 times faster than Bitcoin.
So it's leverage. It's just an amplifier.
Exactly. Both up and down. When Bitcoin drops 10%, strategy often drops 34%. But when Bitcoin rallies, strategy just rockets. That's why people trade it.
Right. It's a way to get amplified exposure without using margin on a crypto exchange. You're buying volatility.
You are.
But looking at the chart, it looks like it's been dropping more than rocketing lately. Feels like all the air has come out of the balloon.
That's true for the last few months, but we are seeing a classic capitulation to accumulation pattern. That 62 to 67% decline we talked about, that flushed out all the weak hands.
The tourists.
The tourists who bought the hype at the top. The volume is drying up, the stock is consolidating near support, and that usually precedes a reversal. The sellers are exhausted.
There was that huge signal late last year about the short sellers. I found this fascinating.
Yes, the exit of Jim Chanos.
Right, Chanos. He's legendary. He's the guy who called Enron. He is not a guy who scares easily. And he exited his short position in strategy back in late November 2025.
That should have been front page news.
So why did he exit? Did he just see something change?
He likely realized the downside was limited. When the stock trades near its net asset value, meaning the stock price is basically just the value of the Bitcoin they hold, there isn't much profit left for a short seller.
The thesis is broken.
The thesis is broken. You short a stock when you think it's overvalued. If it's trading at the value of its assets, the easy money on the downside has been made. When the smartest bear in the room leaves the cave, you should probably pay attention.
And that short covering brings us directly to market sentiment. Because despite Chanos leaving, the mood here is, well, it's complicated. It's a battleground.
It's very polarized. You have true believers on one side and people expecting a total collapse on the other.
And on one hand, the recent sentiment scores are negative, averaging around minus 0.3. The headlines are all about this Cormorant's class action lawsuit.
Right, alleging misleading risk disclosures.
Plus, you have the general fear from the stock plunge itself.
That lawsuit is definitely creating noise, and institutional investors hate uncertainty.
And there was that huge scare about the MSCI index, right? The fear that they would get kicked out.
That was a massive overhang. Investors were terrified that MSCI would remove strategy from its indexes.
Why does that matter so much?
Because if they got kicked out, every ETF and index fund tracking that index would be forced to sell the stock instantly. We're talking about billions in forced selling pressure, machines just dumping shares regardless of price.
That didn't happen.
No. And this is the bullish reality that isn't getting enough headlines. On January 6th, 2026, MSCI decided to retain strategy in the indexes.
That is huge. That's a bullet dodged.
It is a game changer. It removed an estimated, what, $2.8 to $10 billion in potential forced selling? That risk is completely off the table now.
So the bad news, the index fear, the price crash is mostly in the rearview mirror.
It seems that way to Wall Street. Despite the scary headlines, 14 out of 18 analysts currently rate the stock a strong buy.
That's a very high conviction rate for a stock that's down 67%. Usually analysts run for the hills when a chart looks this ugly.
It is surprising. The median price target is $474. That implies an upside of about 230% from where we are today. One analyst even has a target of 705.
Wow. So if they're right, we are looking at a multi-bagger from these levels.
And the institutions seem to be positioning for it. We saw a transfer of $5.1 billion in Bitcoin to Fidelity for custody.
What does that signal? Is that just moving money from one pocket to another?
You don't move that kind of money to a heavy hitter like Fidelity if you're planning to liquidate. That signals they're playing the long game with institutional-grade security. It tells the market these assets are safe, they're insured, and they aren't going anywhere.
Okay, but I'm the skeptic here. It's my job to find the holes in the boat. We need to do a deep look at the risks, because if Bitcoin sneezes, this company catches pneumonia.
That's fair. The risk profile is extreme.
So risk number one is obviously a Bitcoin price collapse. The entire company is leveraged to this one asset. Their recent purchases have a cost basis around $88,000 to $92,000 per Bitcoin. If BTC drops below that, they're underwater on those coins.
That's the leverage trap.
Right.
With that beta of 3.43, a 30% drop in Bitcoin could technically wipe out the stock's equity value. If Bitcoin goes to 40,000, this stock could trade in the single digits. You have to be okay with that.
And then there's the legal side, that class action lawsuit. If they lose, could a judge force them to change their entire strategy?
It's possible. Regulatory headwinds are always a threat. If the SEC decides holding this much Bitcoin makes them an unregistered investment fund, that changes the whole game.
And what about dilution? This is the one that bothers me the most. They keep issuing more shares to buy coins. As a shareholder, my slice of the pie is just getting smaller.
It's a valid concern, and it's the nuance that most people miss. But I would push back on the dilution argument. You have to look at whether the dilution is accretive.
Accretive how? If there are more shares, my shares are worth less percentage of the company. That's just math.
Think of it this way. Imagine we own a pizza shop. I issue more shares, so your ownership drops from 10% to 5%. That sounds bad.
Right.
But I use the money from selling those shares to buy 5 more pizza ovens and double the store size. Even though you own a smaller percentage, the amount of pizza your shares represent has actually gone up.
So I own a smaller slice, but the pizza is now the size of a stadium.
Exactly. The metric to watch is Bitcoin per share. If they issue shares to buy Bitcoin and the amount of Bitcoin per share increases, then the dilution is actually good for you. And so far, that metric has been going up consistently.
That assumes Bitcoin holds its value, though. If the pizza turns into dirt, it doesn't matter how big it is.
True. It all comes back to the asset. But remember that cash reserve we talked about. The $2.25 billion is the buffer. It allows them to weather a storm without being forced to sell at the bottom.
So weighing the massive leverage against the massive reserves, do we buy the dip?
Looking at all the data, I'm giving this a bullish score of 8.5 out of 10.
8.5 is pretty high for something with this much baggage. That's a very confident score.
It is, but the thesis is just so compelling. This is an asymmetric trade. You are buying a Bitcoin treasury at a discount trading near or even below its net asset value. The downside is limited because you're buying the assets for less than they're worth.
And the catalysts?
The MSCI overhang is gone. That was the biggest block. And the CEO, Phong Le, is predicting a big 2026 for Bitcoin. If you believe we're in a crypto bull cycle, this is the most aggressive way to play it in the equity market.
What's the time frame here? A quick flip or a long hold?
I see it as a swing trade into Q1 earnings, but primarily it's a multi-year hold. You're looking for Bitcoin to hit that $150,000 plus target. If that happens, this stock doesn't just double. It could triple or quadruple because of that beta.
I have to acknowledge the risk, but I agree that discount to NAV makes it compelling. If you believe in crypto, buying $1 worth of Bitcoin for 90 cents with a leveraged kicker attached is hard to pass up.
Exactly. It's about buying the fear. When everyone else is terrified of the lawsuit and the chart, that's usually when the bottom is in.
It's just a fascinating experiment in corporate finance. We've never seen a company behave like this before. It breaks every rule in the MBA textbook.
We haven't. And here's a final thought for you. Right now, strategy is the outlier, the crazy one. But what happens if another S&P 500 company decides to follow suit? What if a tech giant decides to put 5% of their treasury into Bitcoin? If that happens, strategy isn't just a company anymore. They become the blueprint for a new standard in corporate treasury management, and they'll have a 10-year head start.
That is a wild thought. If they're right, they aren't just rich, they are visionaries. If they are wrong, it's a spectacular cautionary tale.
And that's what we watch.
That's the verdict on strategy. If you're riding this volatility, let us know in the comments. Are you buying the dip or staying on the sidelines?
And just remember, volatility works both ways.
Don't forget to subscribe, like, and comment to support the show. See you in the next one.